So, what if I told you that one of the single greatest investors alive today, a guy who, get this, has never had a losing year in over 3 decades, is basically screaming a warning about a huge shift in the financial world? This isn't just some theory, okay? This is the real-time thinking of Stanley Druckenmiller, and you really can't afford to ignore what he has to say.
And that's really the heart of it. This is a massive wake-up call. There's this huge, dangerous gap between what the pros see coming over the horizon and what most of us even realize about the risks hiding in our own retirement accounts. Look, Druckenmiller has already positioned himself. The real question is, are you ready for what he sees coming?
All right, so how do we even begin to navigate this thing? We're going to break down Druckenmiller's thinking into 4 key parts. First, we'll get into why the old rulebook is totally broken. Then, we're going to look at the storm he sees gathering out there. After that, and this is the important part, we'll uncover the 3 safe havens he's recommending for your money. And finally, we'll dig into his critical warning for anyone who's even thinking about retirement.
I want you to imagine you're playing a game, maybe chess, and you're good at it. But then, halfway through, someone just changes all the rules. The pieces move differently, the old strategies don't work, and what used to be a guaranteed win now leads straight to disaster. Well, that's pretty much what's happening in the financial world right now. The playbook that worked for the last 40 years, it's obsolete. And if you haven't adapted, you are at a serious, serious disadvantage.
You see, for more than a decade, the financial world was basically a giant party, fueled by an endless supply of free money. The Fed just kept printing trillions of dollars, keeping interest rates near zero. And, just like at a great party, everybody felt like a genius. Stocks, bonds, real estate, literally everything just went up, up, up. But what happens when the party stops? What happens when the free money runs out?
Well, the party's over, and that free money has been replaced with a massive bill called inflation. Now, the Fed is scrambling to pay for it all by jacking up interest rates. We are in a completely new financial reality, and anyone who doesn't adapt is going to be left with a really, really nasty hangover.
But the real consequences of that decade-long party, they're only just starting to show up. The easy money might be gone, but it left behind this trail of huge structural problems that are now threatening to unravel the entire system. First on the list is the national debt. We're talking about a number so massive it's hard to even wrap your head around it. Over $35 trillion. To put that into perspective, that is more than the entire economies of China, Japan, Germany, and the UK combined. And here's the real kicker. We built up all this debt when interest rates were basically zero. Now, we have to pay it all back in this new high-rate world.
And the bill for that is just staggering. The interest payments alone on this debt are now over $1 trillion a year. That's more than we spend on our entire national defense. I mean, just think about that for a second. We are spending more money just to pay the interest on our debt than we are to protect the entire country. It's really no wonder Druckenmiller calls this the most reckless fiscal situation in American history.
And it looks like it's all coming to a head right around 2026. That's when this perfect storm of economic triggers seems to converge, creating a flashpoint that could send shockwaves through the whole financial system. We're talking about the full economic fallout from tariffs, another crazy high-stakes political showdown over the debt ceiling, and this ticking time bomb in commercial real estate, where a huge wave of loans is about to be refinanced at these new, cripplingly high interest rates.
But hey, this isn't just a story about doom and gloom. See, Druckenmiller is a master at not just seeing problems, but figuring out how to turn them into opportunities. So now we're going to dive into the absolute core of his strategy, the 3 safe havens where you can not only protect your money, but actually position yourself for potential growth in this brand new era. This is not about running for the hills, okay? It's about building a fortress, a disciplined, defensive formation that can weather pretty much any storm. And this fortress is built on 3 pillars: gold and other hard assets, the right kind of bonds, and that's key, and companies that have a secret weapon called pricing power. So let's break down each one of these.
Okay, first up, gold, the classic store of value. But this isn't just about hedging against inflation anymore. In Druckenmiller's world, gold is a hedge against the one thing that can really destroy a currency: fiscal irresponsibility. As governments print more and more money to get out of their own debt traps, the value of our dollars, well, it just erodes. Gold, on the other hand, it just sits there, holding its value, a timeless anchor in a sea of devaluing currencies.
All right, now this is where it gets really interesting. For decades, we've all been told that long-term bonds are the safe investment. Well, in this new world of rising rates, that's not just wrong, it's a dangerous myth.
They're actually kind of toxic. Here's why. A 30-year bond can lose almost 20% of its value with just a 1% rise in interest rates. The real safe havens have been hiding in plain sight this whole time. Short-term T-bills and those inflation-protected bonds, also known as TIPS. The third and final pillar of our fortress is where we find not just protection, but the chance for some real growth. It's a secret weapon called pricing power. Just think about your favorite brand of coffee. If they raise the price by 25 cents, are you really going to switch to another brand? Probably not. That is pricing power. And in an inflationary world, it is the single most valuable asset a company can have.
So where do we find this amazing pricing power? Well, it's not random. It's actually built right into the structure of certain industries. Think about healthcare, because when you're sick, you'll pay just about anything to get better. Or energy, because the whole world runs on it. And of course, consumer staples, because no matter how bad the economy gets, you're still going to buy toothpaste and toilet paper.
So let's bring this all home. Let's talk about what really matters here. You. This isn't just about numbers flying around on a screen or some complex financial theory. This is about your future. It's about your security and the money you have worked your entire life to build up. And if you are in or even near retirement, this is a message you just have to hear.
This right here is the harsh reality of risk. See, if you're young, a market crash is like a fire sale. It's a massive buying opportunity. But if you're retired, it's a house fire. You're forced to sell your precious assets at rock-bottom prices just to pay the bills, turning what should be a temporary dip into a permanent, devastating loss. You simply don't have the luxury of time on your side. And this quote just says it all, doesn't it? The tide of easy money has officially gone out, and now we're all about to find out who's been swimming naked. It's just a stark reminder that the good times never last forever, and those who weren't prepared are about to be left very, very exposed.
The smart money has already made its move. The Stanley Druckenmillers of the world, they've already built their fortresses and they are ready for whatever comes next. So the only question left is, are you?